Hi, I'm Scarlett Sieber, Chief Strategy and Growth Officer here at Money 2020, and you are watching Taking Stock.
Two minutes to go here into the closing bell on this Wednesday, March 4th. The relief rally continues here with a classic risk-on names leading. That includes technology stocks, discretionary, as well as telecom. We do have a few losses, however, for the S&P 500. That includes energy and staples. Welcome to the broadcast. Well, no, you're watching Taking Stock. We are live down here on the iconic trading floor of the New York Stock Exchange, and the crowd goes wild. That's the best part of my day. Thank you all for being down here. We got the team from Pfizer, ticker symbol PFE, set to do the honors here in just a few moments. And a very happy birthday on this March 4th to the one and only S&P 500, re-indexed into its current market capitalization formula all the way back in 1957. On this trading Wednesday, March 4th, with less than a minute to go here in the closing auction, yields up across the board. Gold and silver both back up. West Texas Intermediate and Brent crude, they are finally taking a breather after several days of high-profile gains, and the crypto majors are all up. We'll get into that and much more and chat with the one and only Jay Woods of Freedom Capital Markets. Jay is on deck. He'll join us right after the bell. As for the Dow 30, your strongest performers in the Dow today include Amazon, Cisco, and IBM. Your Dow laggards, Chevron, Coca-Cola, as well as Nike. Time now for the bell. We'll pick up Taking Stock right after this. And there you have it, your final tale of the tape on this Wednesday, March 4th. The S&P 500 celebrating its birthday will finish up about 0.8%. The Dow 30 up 0.5%. The NYSE Composite Index up at this hour 0.4. And the small caps, the best of the bunch, the Russell 2000 up a full percent. I got to flex when I say the Russell. I love it. Let's bring in Jay Woods. Jay, you called this yesterday a bend but not break market. You have been watching 6830, that 100-day moving average in the S&P. What have you seen today in these markets?
Yeah, we're seeing a resilient market. We're getting headlines that get a lot of people jittery. And it's a little confusing out there, but fear not. We are holding key levels, but now we know the ceiling was 7,000. Now it feels like that ceiling 6,900, and this range continues to narrow. When you see activity like this, it's been one of the narrowest ranges to ever start a year. Something feels like it's going to give. Is it going to be the floor or the ceiling? The catalyst, NVIDIA, didn't take us over the hump despite great earnings. Maybe Broadcom does that today after the bell. We'll see. We've seen a rotation back into those heavy beaten down tech names, especially in software, and those high-flying names and energy in staples getting hit today. So rotation continues. We saw rotation out of the markets that had been on fire. Hello, South Korea, down 12% after being up 200% in the last year. Gold, silver, major pullbacks after people ran into them. So people seem to have anticipated something happening in the world, and now they're jockeying back to, all right, we got through that, where do we go? I don't know what's going to break us, but right now we're bending and we're not breaking. Getting back to your point.
That's a fascinating note there, which was your point that I repeated because I watch all of your TV hits. Fascinating fact there about the S&P being rage-bound, but as I've heard from a great technician, sideways is a direction, as the great Jay Woods likes to say. Let me ask you about Target, because we got a lot of retail names this year. That continues to be the big outperformer, up fractionally on the day, up more than 20% year to date. Yep. Maybe a bit of a catch-up trade from how it traded relative to the other retail names last year. What do you see in TGT?
New leader at the helm, Mike Fidelke, also his first quarter as CEO. We are seeing a nice turnaround. That stock has been beaten down since its 2021 high, still in a very long-term downtrend, but has room to run higher, and that's what we're looking for. Yesterday, that was lost with all the Iranian headlines, understandably so, but the stock has done something well. It's consistently starting to go higher. I think the turnaround is real. As a technician, I look at price action. I think over the next 3 months, this stock could be in the low 130s, maybe even test 140. So they're doing things the right way fundamentally, and technically the story is confirming that.
Can I ask you about Broadcom? Up 1.5% today. We do have their earnings call set to cross the tape really here any minute. One of the places maybe to put money to work despite all the volatility and the uncertainty as of late. What were you following for
I
AVGO?
will follow price action, obviously. We saw it with NVIDIA. NVIDIA has been sideways in a direction for 7 months, all right? We thought it was going to break out with that phenomenal fundamental report. It wasn't enough to push it. It came back to its floor. It's another stock. You look at NVIDIA, you look at Broadcom. 310 is the level I want to see hold. If it breaks 300, I'll be concerned. I wouldn't want to jump in. I'd rather buy it on strength, see a good day, and close at the high, and get this stock back on track. So hopefully the news is good, the guide is good, and price action confirms that. That's what's been missing, good price action in this market. That's a sentiment factor to me, and that makes me a little skittish that we're not really going anywhere right now.
After last Friday's hotter than expected, I was on vacation. as you know.
PPI.
Was it wholesale? It was PPI, inflation
yep.
print. Does that underscore the importance of Friday's jobs numbers, all the more so?
No, I think that jobs number is top of mind. I mean, we're talking about the Fed, not enough, but Kevin Warsh is the official nominee. What is he going to do? He's got 2 more meetings, then he takes the reins. If you haven't noticed, the president wants to cut rates, but if the jobs number increases, if PPI, CPI, inflationary numbers go higher and gas prices go higher, the biggest cause of inflation, it's going to be very difficult for a new Fed chief to come in and say, hey, let's cut rates if inflation's getting out of control. So we want to see a stabilization on jobs. That'll be Friday. And then next week, CPI, PCE, the Fed's preferred inflationary gauge, comes out. That will then put the Fed back in the spotlight. We're watching more now from inflation, gas prices at the pump.
Yeah.
Let's see if we can keep oil under 75. If it spikes above 80, stays there for a long time, could be problematic for the new Fed.
Before I let you go, talk to me a bit more about how you're thinking about the Fed. I found it interesting that we have not really heard a lot of public commentary from Kevin Warsh. We finally got the announcement from the president, maybe people trying to see, will he speak out in a way that market participants follow more closely than Jerome Powell? It's been kind of silent on the FOMC front.
Well, we're still waiting to hear if they pull back from this investigation into Jerome Powell about the renovations. The people that are voting for Kevin Warsh's nomination have said, all right, we won't vote until this Powell display, this ridiculous lawsuit goes away. So there's a lot of drama that will come back into the spotlight. For now, I'm glad we're not dealing with that because it's just that drama, not fundamental news. So we'll get to the Kevin Warsh drama and the nomination process over the coming weeks, but let's focus on inflation, let's focus on Iran, and then we'll get to the Fed in due time.
Absolutely. The great Jay Woods of Freedom Capital Markets and a CNBC contributor. You brought the hype and enthusiasm today here, Jay. They're all here for you.
Oh, clearly.
That's what I was told. You think they're here for the bell and for Pfizer. They're like, we need to see Jay Woods
Pfizer,
do
great
his thing in
turnaround
person.
stock there, too.
There you
and
go.
Dividends.
PFE. There you go. And a dividend player. We'll talk to you soon. Thank you for
All
being
right,
here.
thank you.
Josh will grab your mic. You and I will head this way. We'll bring you the top analyst calls here on Wall Street for this trading Wednesday, March 4th. Pardon me, I'm going to sneak right through. Truist analysts initiating both Pulte Group and Toll Brothers as buys in the home builder space, saying the former is well positioned with a 170 price target. The latter continues to be undervalued. Next up, Wedbush Securities analysts reiterating Amazon, Meta, and Alphabet, all 3 of those mega cap tech giants at outperform. They call them, quote, structural winners in the digital advertising space in the age of artificial intelligence. And finally, Telsey analysts upgrading Target to outperform. They see signs of an ongoing turnaround, like Jay Woods and I were just talking about here at the NYSE a few minutes ago. Shares of Target up almost 25% so far here in 2026. We'll take a look at a few NYSE notables. How about private credit giant Blue Owl, much beleaguered here for several months. It is up fractionally on the day. Oppenheimer says the brutal sell-off we've seen for OWL is simply overdone, writing Blue Owl seems to have become a magnet for bad press in recent weeks, a lot of which has been misleading and unfair. Shares of Blue Owl down about 30% so far here in the young year of 2026. And we'll swing around this way, Howie. We'll take a look at shares of General Motors, up 1.7% on the day. Analysts from Bank of America reinstating GM as a buy, saying the auto giant should benefit from lower warranty costs as well as lean inventory levels. The average analyst price target across Wall Street for GM sits at $93 a share. That suggests additional upside potential of about 18%. The New York Stock Exchange's very own Kristen Scholler scored a one-on-one interview with two-time Olympic gold medalist Alyssa Liu right here in New York City up at 30 Rock. Take a look.
We're here at the rink at Rockefeller Center, and I'm joined by two-time Olympic gold medalist Alyssa Liu. Alyssa, welcome home and congratulations.
Thank you so much.
It was absolutely stunning to see you compete, and I love your story because you retired a few years ago, but then you decided to come back to figure skating, this time on your terms. How so?
I wasn't able to pick my own music before, pick what dresses I wore, pick the programs I had, and this time I get to because I have my own, I have my own ideas and my own opinions about all that stuff, and it's really my art, and I am just here to express it.
And just your camaraderie with your peers and your competitors in Milan was beautiful to watch as well, since it's Women's History Month now in March of 2026. Why is that important to you, supporting other women, including your competitors?
Yeah, I mean, it's really important because we all are just our own individual athletes, and we all just share the ice together. And I really do think the more we uplift each other, the better we all get.
What is next for Alyssa Liu?
I have maybe World Championships coming up. I have yet to fully decide if I'm going to do it, but I really want to. That's end of March. And then we have Stars on Ice tours, where me and the other Olympic skaters, we go and do programs all around the U.S. And that's coming up in April.
Do you have your music and costume picked out?
Yes, I do.
Our head of media has a gift for you as well.
On behalf of the New York Stock Exchange, we wanted to give you with a challenge coin. And listen, you're more than up for the challenge. You brought gold home to us. We brought the belt to you, but congratulations from all of us.
Thank you. Thank you.
This is the New York Stock Exchange bell, and we invite winners at the NYSE to ring the bell to mark the open and close of markets each day. We've got a gavel right there. Will you do the honors for us and give it a ring? Going out with a bang, Alyssa.
Welcome back to the show on this Wednesday, March 4th edition of Taking Stock. I'm JD Durkin here at the New York Stock Exchange. Our next guest, Embre Subaran. She is the CEO of Kaiko. She joins us down here on the trading floor at the FinTech TV booth. It is great to have you here. Thanks for joining us.
Thank you for having me.
CEO of Kaiko. Kaiko, a digital asset data company. You provide analytics, you provide pricing for the broader cryptocurrency space. Given the liquidations that we've had, everyone thinks back to that infamous now October 10th event. Does that underscore the importance for the transparent type of data that Kaiko specializes in?
Yes, absolutely. I think it raised a very important focus on the value of accurate data, timely data, for cryptocurrency as a whole as an industry, but also now as all the institutions are looking at leveraging blockchain as an underlying infrastructure for doing all sorts of capital markets applications. It also puts the focus on what is the data infrastructure as kind of core market infrastructure that we have today on blockchain technologies. So it's both important for crypto, but also as we think about the bigger digital asset tokenization movement we're seeing right now in the industry.
What type of data was not part of the equation for would-be investors or institutions that now you feel Kaiko can more uniquely address and provide?
So when it comes to crypto markets, data was provided on-chain through oracles. What I think October 10th underpinned is the importance of timeliness and accuracy. And I don't necessarily believe that all data needs to be decentralized in order to be, provided on-chain. And I think that is a part that the crypto industry is waking up to. Now, when it comes to data that is brought on-chain for non-crypto use cases, what we're seeing is the necessity to have kind of IP-protected real-time market data streams enabling 24/7 traditional financial applications on the blockchain. We've announced actually a pretty meaningful partnership last week with Bloomberg, where we are bringing traditional IP-protected market data onto smart contract environments for applications such as repo and all sorts of like non-crypto applications leveraging smart contract technology. And I think that is extremely powerful.
I want to ask you about stablecoins because they now make up the vast majority of all tokenized assets. Does that show the market is shifting from speculation to more active real-world use? How are you viewing the general stablecoin tokenization kind of Venn diagram and overlap?
Yeah, so yes, I think it does show a focus on utility and real applications, right? And stablecoins are used for payments, they're used for settlements, they're used for cross-border transfer, they're used also to just serve as yield-bearing assets. And so what we are seeing with the growth of stablecoin beyond just pure utility is like real-life industrial applications, right? This is not speculative, this is a payment application. So stablecoins for me is a proof that we are graduating from pure crypto use cases, which is wonderful. I mean, crypto is an incredible environment to test all sorts of financial applications using blockchains. Stablecoins is now proving the utility of that and scale that this can reach. I think we're seeing something like 300 billion worth of stablecoins are now kind of on blockchains, and this is clearly driving a lot of the institutional focus and interest for the technology.
I want to get your take on perpetual futures. We do so many interviews here on the show where the idea of perps trading comes up. It's now driving so much of the general trading and price activity for the major crypto players, especially for Bitcoin. What does that evolution tell you? And what realities of perpetual trading do you think people should pay a little bit more attention to?
Yep. So yes, you're absolutely right. I think just for Bitcoin, perps is somewhat around 68% of the global traded daily volume for Bitcoin. It is huge.
Wow.
What we like about perps and what institutions like is it's very capital efficient. It's relatively straightforward in terms of like the operational way of what that works. What I love about this is the emergence of non-crypto perps. And the reason I love it is that we are taking a very efficient crypto native instrument, perps, and putting that on, or applying that instrument for traditional financial assets. So we've seen now equity perps being launched, we are seeing commodity perps, we're seeing all sorts of markets. Kaiko is powering on-chain, non-crypto perpetual markets on Hyperliquid. All of these evolutions are really at the intersection of traditional asset classes, but crypto infrastructure. And I think it's fascinating to see how quickly institutions are looking into this now. I mean, NYSE announced their own crypto perpetual swaps. We work with SIBO on continuous futures. Like, this is happening at scale at an institutional level.
Anne-Marie Soubiran is the CEO of Geico. Please come back onto the broadcast anytime. It was great to have you down here on the trading floor.
Thank you very much.
Don't go anywhere. Much more Taking Stock coming up from the big board after this. Let's do it. Welcome back to the show. Time for a few important headlines for your Wednesday afternoon you need to know in the world of startups, raises, as well as rounds in the world of finance and markets. First up, Anthropic is on track for nearly $20 billion in annualized revenue. In doing so, more than doubles its run rate since last year alone, even as the company's clash with the Pentagon cast a bit of uncertainty over government-based sales. Also happening at this hour, the Wall Street Journal reporting Thrive Capital and Andreessen Horowitz are co-leading a multi-billion-dollar investment in defense tech startup Anduril, doubling its valuation to $60 billion as venture money floods into AI-powered autonomous weapons, certainly top of mind for many these days. And finally, Akash Systems launching new diamond-cooled AI servers. You heard me right, diamond-cooled. They run hotter, faster, more efficiently than traditional machines, cutting cooling costs, boosting performance, and potentially adding up to $1 million in extra value per server over the course of 4 years. Let's continue the conversation with Akash Systems. Dr. Felix Ajechem is the co-founder and CEO of Akash. He joins us now. Felix, it's great to have you join the broadcast. You're joining us remotely. You build advanced cooling tech for AI data centers using diamond materials. That sounds absolutely awesome. I don't know that many of our viewers actually know what it means. What does it mean?
Thank you, JD. It's good to be here with you. Today, we are announcing an incredible server, the world's most thermally energy efficient and capital efficient server that can be used in any data center, whether it is a data center that is at a regular ambient temperature or a data center that is at a very hot environment going up to 120 degrees Fahrenheit. You can take this server and it will continue to deliver compute flops, whether you are in a Texas, Arizona, desert, very hot ambient, or whether you're going to a very cold environment. It will continue to generate flops and deliver to the operator $1 million of value over the use life of the server, typically 3 to 4 years. We're very excited about it.
You just announced a $300 million order. What does that say? What does that tell you about the demand for cooling technology, most specifically amidst this overall AI boom?
JD, the problem of heat energy conservation in data centers is a big problem. It is the biggest problem of our time, and we have solved that problem. We have solved it with diamond cooling. By putting diamond on the GPU, we're able to deliver compute, bring in revenue from 2027, 2028. An operator doesn't need to wait that long. You can use these servers today and get your compute done today. You don't need to wait. You can pull in revenue to the left.
Felix, can you talk to me about the way that this may change the actual locations of where data centers can be built? You name-checked a few of those hotter locations earlier. Talk to me about potential scale. I mean, it sounds like you are now having the ability to scale to and explore regions of the U.S. and maybe around the world that previously really weren't up for discussion.
Exactly right. That's exactly right. So you don't need to be very sensitive to location anymore. You can go to your existing room, existing building, warehouse, wherever you want to have compute and deploy a server. This very server right here, you don't need infrastructure that is otherwise unavailable to you today. You can deploy these servers in your facility today, pull in revenue to the left and use it to generate compute, whether it's flops or tokens.
As AI demand explodes, energy use is a huge issue. How big can you see this getting, especially the unique process of cooling that you and the team at Akash have pioneered?
We're excited about the future, JD. We see a long roadmap of additional SKUs ahead of us, both from AMD and NVIDIA. There are multiple servers, GPUs that are coming out down the pike, and we intend to deploy diamond cooling with all of them to make this available to the entire market. The problem is quite significant. The problem is quite large, and it's present, and we're excited that this technology is now available to the market today to deliver to AI.
Yeah, I got less than 30 seconds left. Any other big catalysts or things on the horizon you think people should pay more attention to in the general space where Akash is an industry leader?
Absolutely. We've got a bevy of additional servers coming out down the pike, both from NVIDIA and AMD, additional generations of GPUs that we will deploy our technology in. And this bodes very well for the way the market is developing. As you know, both companies, AMD and NVIDIA, are releasing a very large number of GPUs every month. And so we're quite positioned well to deploy our technology with these additional SKUs.
Dr. Felix Agjekim, co-founder, CEO of Akash Systems, thank you for being here to make the case. You're always welcome back on Taking Stock. Rest of you watching at home, don't go anywhere. Much more broadcast from the NYSE coming up after this. Let's do it. Welcome back to the broadcast. Time now for a few fintech, crypto, and artificial intelligence headlines for your Wednesday. First up at this hour, the crypto majors knocking the cover off the ball, but of course everything's relative. They've been down quite a lot over a few months, but Bitcoin at this hour up 7%, trying to reclaim the 74,000 level. Solana up 8.3, or excuse me, ETH up 8.3, Solana up 8.6. Next up, President Trump stepping up pressure on the banking industry to back the so-called Clarity Act in the hallways of the U.S. Capitol, accusing banks of undermining his pro-crypto agenda as the fight over stablecoin yield stalls market structure reform in the United States Senate. And finally, OpenAI CEO Sam Altman telling employees the company does not get to make, in his words, operational decisions about how the Defense Department uses the company's AI models, even as OpenAI expands deployment across classified networks following Anthropic's blacklisting. Today, March 4th, is a very special day in the history of the U.S. financial markets. Money 2020's Scarlett Sieber explains why.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020, where history gets receipts and finance gets personality. Imagine that. So it's March, right? We're going to go back in history. Today we're rewinding to March 4th, 1791. So we're going way back in history when the U.S. government created the first Bank of the United States. This was America's "we should probably get our financial life together" moment. Before this, total chaos. 13 states, 13 currencies, no central bank, and enough debt to make your credit card bill look responsible. And that's saying something. Fiscal anarchy with the side of, we'll see what happens. Hamilton steps in like the original fintech founder, pitching Congress. Look, if we don't centralize this mess, we're going to default and no one's getting funded. Not even your favorite infrastructure pet project. And of course they had those back then, right? Congress approves the first national bank. Suddenly, the country has a stable currency, federal deposits under one roof, a mechanism for issuing credit, and actual economic confidence. Imagine that. This was America's first real financial rails moment, the OG BAS platform. Sure, the API calls were basically quill pens and ledgers, but the architecture, well, that was genius. Without it, there's no Wall Street, no bond market, no venture ecosystem, and no fintech boom. Hamilton didn't just build a bank, he built the foundation for capital markets. Wow, a lot happened in March in 1791. What a great look back. That is your hindsight 2020. The first bank wasn't just a building, it was the moment America stopped improvising and started operating. And with that, back over to you.
For what? Welcome back to the show. Tomorrow on Wall Street, we will get the latest figures for initial and continuing jobless claims. And in the morning, quarterly results from JD.com, not my personal website, Burlington and Kroger. After the close, Marvell, Costco, GoPro. That's it for today's edition of Taking Stock. Have a good one. We'll see you tomorrow.